Welcome back to Fast Money. Wall Street seeing green today with the major markets all breaking three-day losing streaks. The move coming as Fed officials get ready to kick off their Jackson Hole summit tomorrow. But how can we expect markets to react from what comes from the central bank in the coming days? This has been the big question for some time, and now it is really upon us. So let's get more on what to expect with market forecaster Jim Bianco. He runs Bianco Research. Jim, any expectations that Fed Chairman Powell and the other Fed speakers, frankly, will make any action towards this pivot we've all been talking about? Or is it steady as she goes? We still got a long way to see what the policy that's already been enacted will actually do.
Yeah, I think it's steady as it goes. It's way too early for the Fed to consider a pivot. But let's talk about what's changed in the market in the last couple of weeks. Back in July, the Fed said that they would abandon forward guidance, which is a fancy way of saying they're going to tell you what they're going to do before they do it. They're going to be data dependent. And the market thought, good, you're going to see data that's going to give you reason to stop raising rates by the end of the year and start cutting rates by the middle of the next year. In the last couple of weeks, there's been some doubt cast on whether or not that data is going to come to pass. The Fed may see reasons to continue to raise rates into 23 or at a minimum not cut rates until 2024. And I think that that's what's giving the market jitters. So I expect Chairman Powell is going to reiterate that. It's too early to be talking about a pivot. There's very little evidence that the labor market is really hurting. There's some, but not enough to get the Fed to stop from their primary mission as they see it, is in fighting inflation.
Hey, Jim, it's Karen. Thanks for being on. I completely agree with you about the pivot. But what is it that you think that the Fed needs to see in terms of inflation or bad, I guess, recession economic data that would make them pivot?
I think the focus is going to turn to core inflation, because if you look at year over year core, there's a possibility in the next 60 days, the next 2 months, that could make a new high. The old high is 6.5% year over year set in March. If it doesn't make a new high, we're going to come very close to it. I think they have to see that data start to come down, because right now what we're seeing in headline inflation is just crude oil, and more specifically gasoline. As I've joked, we could get rid of all of the quote machines and all the analysis. Let's just have an emotional reaction to the price of gas, because that seems to be all that's driving these markets right now. So you show signs that core inflation is really peaked, and it's up in the air whether or not it has right now. Then I think the Fed might start to consider a pivot. And it's way too early to say that.
Jim, when I was reading your notes, what stood out to me is a comment that you said, we're not going back to the pre-COVID economy. Explain what that means. And obviously, we have a Fed that's going to be in a very different place. We have a market that probably doesn't have that Fed put. But what about the economy?
You hear a lot of people talk about when the economy returns to normal. It is normal right now. This is the post-COVID normal. Post-COVID is a different economy. We're not going back to the way that things worked in 2019. And that specifically, I mean, work from home, our consumption basket has changed, and a lot of other things have changed. The sooner we recognize that, the sooner we can get about fixing the problems with the supply chain, with the bloat in inventories at retailers because they're stocking the shelves with the wrong stuff. We need to understand that this is a different economy. That does not mean dystopian. That just means different. And I think that this is also leading to more inflation. So those that talk about when things return to normal, when the supply chain corrects itself, when everything goes back to 2019, yes, and the N train is packed with people and everybody goes back to the offices in Midtown, guess what? I don't think that's going to happen. And when we start to recognize that that's not going to happen, then we can get about this idea that there is a post-COVID economy, which is not like the pre-COVID economy.
Very interesting thoughts, Jim Bianco. Thank you for joining us. I want to trade this. You know, Tim,